Welcome to Tweets That Move Markets, an in-depth look at how social media, particularly X, formerly Twitter, has become an unprecedented force in influencing financial markets in 2025. We delve into the unparalleled impact of two dominant social media figures, Elon Musk and Donald Trump. Their statements, actions, political roles, and business decisions continue to drive significant volatility in US stock trends, shaping market narratives, sparking rallies or sell-offs, and profoundly influencing retail investor behavior amidst ever-evolving market conditions. Social media platforms, especially X, are no longer just communication tools. They are rapid and powerful channels for market-moving information. The speed at which information and misinformation spreads often outpaces traditional news outlets, reshaping how capital reacts in real time. Retail investors, armed with commission-free trading apps and real-time push alerts, often respond within seconds to influential tweets, amplifying intraday volatility. Historically, Donald Trump's prolific tweeting during his presidency had documented impacts on various sectors and indices, frequently jolting markets with his provocative posts, whether threatening new steel tariffs or launching attacks on pharmaceutical pricing. Similarly, Elon Musk has risen as a formidable market influencer through his tweets, his leadership at Tesla, and his ownership of X. His posts don't just move Tesla stock. They routinely send cryptocurrencies like Dogecoin into wild surges or breathe new life into meme stocks like GameStop. A study by Leeds University Business School even found that mega influencers can cause significant spikes in trading volume and volatility within minutes of posting. This rapid-fire information flow fuels an environment where fear and greed can easily override logic, intensifying volatility and, at times, disconnecting markets from reality. According to the Bank for International Settlements, BIS, hyper-responsive digital markets introduce new fragility, where misinformation or deliberate hype can trigger panic selling or irrational exuberance, regardless of fundamentals. Let's focus on Elon Musk's social media influence in 2025. With over 206 million followers, Musk is not just Tesla's CEO and owner of X, but also a global communications juggernaut. His tweets possess the power to erase or create billions in market value in minutes, trigger regulatory probes, and ignite widespread investor FOMO. In May 2025, Musk announced a significant reduction in his political lobbying and Washington engagement, a decision that followed investor backlash and a steep decline in Tesla's stock price after a disappointing Q1 earnings report. Tesla's latest results revealed weakening profit margins, battered by intensifying EV regulations, and a noticeable slowdown in global demand. Despite these operational challenges, Musk's digital sway over the markets remains potent. His tweets continue to jolt crypto markets, reviving Dogecoin rallies and breathing life into fading meme stocks like GameStop, often without warning or context. However, the downside of this influence was starkly evident in April 2025, when a Musk-endorsed tweet falsely claimed sweeping new tariffs were imminent. This post caused a 2% plunge in the S&P 500, wiping out hundreds of billions in market value before it was quickly debunked. Once a vocal supporter of Donald Trump, Musk's recent distancing from partisan politics has led some investors to interpret his stance as a shift toward regulatory ambiguity. Without clear political backing, Tesla could face heightened scrutiny, especially given Musk's companies straddle public contracts, space, AI, and energy. Professor Manmohan Sodhi of Bayes Business School notes that while Donald Trump's victory initially boosted Tesla's share price, ongoing poor sales and global boycotts mean Tesla's medium-term sales outlook remains challenging, despite Musk's political connections. New York Times journalist Eric Lipton also highlights how Musk's companies benefit from federal job cuts under Trump's administration, yet face growing scrutiny and political backlash. Musk's posting rate surged to hundreds of tweets per week during the 2024 US election cycle, reflecting a strategic effort to dominate online discourse and shape narratives. Some analysts suggest Musk uses social media strategically to redirect attention from negative press or soft earnings. Now, let's turn our attention to Donald Trump's social media impact on markets in 2025. His return to the Oval Office in January 2025 briefly reignited market optimism, with a post-election Trump bump pushing stocks higher in anticipation of deregulation and pro-business policies. However, this rally was short-lived. Trump's aggressive tariff agenda and unpredictable foreign policy decisions have since reintroduced volatility and uncertainty across global markets. In February 2025, Trump signed sweeping executive orders imposing 20% tariffs on Chinese imports and 25% on goods from Mexico and Canada. The move disrupted global supply chains, spiked input costs for US manufacturers, and reignited fears of a full-blown trade war. As a clear result, the S&P 500 is down 3.9% year-to-date, with rising inflation expectations and corporate earnings downgrades contributing to a broader risk-off sentiment. Sector impacts are sharply divided. Fossil fuel producers, financials, and domestic small-cap stocks are benefiting from deregulation and reshoring incentives. In contrast, technology firms and renewables are facing stiff headwinds, caught in the crossfire of new tariffs, funding cuts, and shifting policy priorities. Meanwhile, analysts expect a wave of M&A activity, setting the stage for large-scale consolidations in telecom, defense, and pharmaceuticals, fueled by Trump's rollback of antitrust enforcement. Trump's social media venture, Truth Social, has become a meme stock darling, surging on retail enthusiasm despite limited fundamentals. Its performance symbolizes Trump's enduring grip over retail sentiment, even as institutional investors remain cautious. The once tight alliance between Trump and Musk has notably cooled in 2025. While Reuters reports Trump's continued public support for Musk, despite criticism of Musk's government role, likely for strategic optics, Politico highlights their months-long silence since April 2025 as a sign of deeper divergence, affecting investor confidence. This fading synergy has fragmented their combined social media power, reducing the coordinated market swings seen in 2023-2024. The symbiotic relationship between Musk and Trump on social media has been a powerful force, historically amplifying each other's influence on social media-driven market narratives. Musk's ownership of X and Trump's robust social media presence created a feedback loop, magnifying their influence beyond traditional institutions. In 2024, after acquiring X, Musk rapidly reshaped the platform into a megaphone for conservative voices. His political engagement surged, with a Wall Street Journal study finding his posts containing political terminology were 230 times more frequent than in 2019, with roughly 20% of his 2024 posts being explicitly political. Musk's platform algorithmically favored Trump-aligned content, amplifying conservative narratives and election messaging in real time. According to CNN, Musk leveraged X to promote conspiracy theories about the Biden administration's immigration policies and warned of political collapse if a red wave didn't materialize. That same year, Musk publicly endorsed Trump's presidential campaign, donating over $100 million to America PAC. Their alliance extended beyond donations. Trump and Musk co-hosted a highly viewed live stream on X, where Trump made unchallenged statements and used the appearance for aggressive fundraising. The event became a flashpoint for retail investor excitement and political alignment around mega stocks and crypto tokens. Political strategist Basil Smikle noted, "Anything that Musk says, you imagine, has been co-signed or even instigated by Donald Trump." However, by mid-2025, a sudden chill descended upon this alliance. Musk began withdrawing from overt political engagement, following criticism from investors and ongoing scrutiny around Tesla and SpaceX contracts. Trump, for his part, has largely stopped referencing Musk, a notable silence that Politico interprets as a signal of deepening divergence. While Reuters notes Trump's continued endorsement of Musk despite criticism, Politico counters that the silence between them since April 2025 is affecting investor sentiment. CNN characterizes both men as masters of the attention war, but acknowledges the battlefield is changing. This unraveling of their once coordinated dynamic has fragmented their joint influence and reduced the market-shaking power they displayed in 2023-2024. This shift isn't just political, it's algorithmic. Musk's decrease in political content, combined with evolving content moderation policies on X, has changed how information spreads on the platform, leading to warnings of growing biases favoring Musk's own posts and renewed concerns about misinformation and echo chamber effects. The effects on retail investor behavior and market volatility are profound. Retail investors are no longer passive participants, they are market movers. Armed with zero-commission trading apps like Robinhood and immersed in social echo chambers on Reddit and X, this new wave of traders reacts to digital cues in real time. When Musk or Trump posts, they don't wait. They act and the markets move. Meme stocks and cryptocurrencies still whipsaw in response to a single tweet. A bullish emoji from Musk can resurrect Dogecoin within minutes. A retweet from Trump can send GameStop or AMC soaring, especially when laced with anti-establishment sentiment. These aren't isolated blips, they're retail-fueled micromanias, driving massive volume spikes and wiping out short sellers in hours. Behind the surges, swarms of online traders chasing momentum and narratives, not fundamentals. Musk's rumored involvement in a federal Dogecoin payment system reignited crypto speculation in early 2025. Even after he pulled back to refocus on Tesla and SpaceX, his Doge legacy lingers, fueling hopes, memes, and trading frenzies every time he nods at the token. However, the same platforms that amplify opportunity also magnify misinformation. Unverified rumors now travel faster than fact-checkers, triggering flash crashes or mispriced rallies that catch both retail and institutional investors off guard. Analysts and regulators warn, fragile liquidity and digital herding create a new kind of systemic risk, one powered by speed, scale, and speculation. The fear of missing out, or FOMO, has evolved into a full-blown trading strategy. When Musk or Trump tweets during market hours, the herd moves. Buy orders flood in, prices spike, fundamentals are forgotten. Retail investors, drawn by the allure of viral gains, often buy high and sell low, trapped by emotion and the illusion of timing the trend. In 2025, the S&P 500 hit a 12-month volatility high. Market analysts found a direct correlation between Musk and Trump tweet activity and intraday price spikes. Robinhood reported record trading surges immediately following key posts, real-time proof of the influence digital personalities hold over modern retail sentiment. We've seen how quickly markets can react to a single post. Have you ever traded based on a tweet? Tell us about your experience in the comments below. This new era of Wall Street plus Wi-Fi presents significant regulatory and market implications, with regulators scrambling to keep pace. The rise of digital megaphones like Elon Musk and Donald Trump has exposed deep cracks in regulatory frameworks not built for viral influence, real-time misinformation, or platform-owned CEOs. The challenge? Policing financial influence without suffocating free speech or stifling innovation. A major concern is the conflict of interest arising from Musk's multiple roles: CEO of Tesla, owner of X, political donor, global deal-maker. This creates a regulatory maze of overlapping interests, where a single tweet can spark a rally, move policy debate, and even shift retail investor behavior. Transparency is elusive. Enforcement is messy. The SEC thinks it might. Officials have warned that viral posts promoting investments, even without traditional disclosures, can qualify as material statements. FINRA now requires broker-dealers to monitor influencer activity, a move aimed squarely at the booming world of finfluencers. False claims and speculative hype aren't just annoying, they're financially destructive. Billions in market value can vanish from a single misleading post. But who's responsible? Platforms? Users? CEOs? There's no clear line, and bad actors exploit that ambiguity daily. The pace of lawmaking can't match the speed of internet sentiment. This delay creates exploitable loopholes, often leaving retail investors exposed and regulators in a reactionary stance. Nigeria has taken the lead with its 2025 Investments and Securities Act, criminalizing promotion of unregistered schemes by influencers. Penalties include fines and prison. In the US, both SEC and FINRA have stepped up. New rules mandate broker-dealer oversight of influencer promotions, and the SEC's Investor Advisory Committee has issued proposals to enhance disclosure rules, expand FTC cooperation, and clarify influencer liabilities. Enforcement is picking up, but platform accountability remains murky, especially with Musk now both influencer and infrastructure. Trump's regulatory rollbacks complicate matters further. Probes into Musk's dual role as government contractor and media gatekeeper have grown politically sensitive. Some argue that enforcement is being softened or delayed for partisan reasons, especially regarding content moderation on X. Reuters highlights ongoing probes into Musk's companies and the uncertainty of regulatory outcomes under Trump's administration, raising questions about political interference risks. The challenges for regulators are immense. What do you think regulatory bodies should do to address social media's influence on financial markets? Share your thoughts. And it's not just the US feeling these shifts. From Nigeria, criminalizing influencer promotions, to other nations grappling with similar challenges, How do you think international markets are responding to the power of social media influencers? In conclusion, the markets of 2025 no longer solely wait for earnings calls or Fed speeches. They move when Elon Musk tweets. They shudder when Donald Trump posts. This is the new reality: personality-powered finance. Musk and Trump have transformed the stock market into a stage for digital influence, where narratives, not numbers, often dictate price action. They've blurred the lines between CEO and creator, politician and meme stock promoter, public servant and market catalyst. Their impact extends beyond valuations. They've amplified volatility, fueled speculative frenzies, and forced regulators into a high-stakes race against virality. And as their business and political alignments shift, so does their influence, sometimes reinforcing each other, other times fragmenting into chaos. What remains constant is their ability to move markets with a keystroke. For investors, regulators, and institutions alike, the lesson is clear: adapt or be left behind. Understanding the psychology of influence is now just as critical as analyzing balance sheets or yield curves. In this era, financial literacy must include fluency in personalities. Tweets move billions, algorithms follow emotion. And mastering this new landscape isn't optional, it's survival. As we navigate this new era of personality-powered finance, one has to wonder, what happens if another influential figure, perhaps a rising tech mogul or a global political leader, steps into this arena? How might that further reshape our markets? What do you think? Should tweets be regulated like earnings calls? Let us know in the comments.